Hello everyone and welcome back to another video from the We Are Investing channel. Today is Easter Sunday, so happy Easter to everyone out there. Today is typically a day that you spend with family and friends, but because of this illness that's going around, you're not really supposed to gather with people, so unfortunately I am staying home today and I will not be able to celebrate this lovely holiday with my family and friends. But I am able to make a video for you guys, so I hope that you enjoy this video. This video will be part one of a part two series regarding the oil sector. On this video, we're going to talk about what's actually happening with oil prices right now. There is an oil price war out there. Oil prices have dropped tremendously, and that is having a huge impact on the markets. For part two of this video series, we'll talk about what kind of investments we can make during this time to hopefully benefit from in the long term. There's a lot of turmoil and volatility in the oil sector, and there are places where you can make some money. So we'll talk about those places in part two of this video series. But like I said, this video is going to be on the oil price war, what's happening with oil price globally and in the United States, and what kind of impact that's having on the markets. But before diving into that topic, I'm gonna be like every other YouTuber and ask that you hit that subscribe button, ring that bell, smash that like button, and add a comment below to get those YouTube algorithms really cranking, help grow this channel, and help me better serve you. So with all that being said, we can now transition over to the topic at hand, and that is the oil markets. To start, let's talk about how much the price for crude oil has changed over the last year, and in particular over the last couple months. So looking at the chart, you can see that in January, the price per barrel for crude oil was about $60. That has dropped down to $20, low 20 range. We're at currently $23. We went from 60 to 23 in basically just a couple months. That corresponds to roughly a 64% drop in price. Now, a 64% drop in oil is drastic. It's huge, and we have never seen a drop like this before in history. OPEC was created to try to take away the volatility in the oil markets and create stability. But right now, the oil markets are not stable whatsoever, so they're kind of failing at the topic at hand. Now, you might ask why the sudden drop in oil prices. I just want to let you know that the price of oil is dependent on supply and demand. And right now, I think we can all agree that the demand for oil has dropped because of the situation that we are facing across the world, including the United States. And everyone knows what situation I'm talking about. I can't mention it by name because then my video might be flagged in YouTube and taken off of YouTube. And I don't want that to happen, so I'm just gonna call it the illness. So with a lower demand, in order to keep that price stable, we have to decrease supply. But that is not what's happening, and actually the inverse of that happened. And that's why we are in an oil price war. Now, there are basically two big countries that are fueling this oil price war, and that is Russia and Saudi Arabia, with Saudi Arabia being the bigger factor in this oil price war. And we're going to get into that. With the decrease in demand following the OPEC's meeting in March, or OPEC Plus, I should say, because Russia was involved in this meeting, and they're not part of the traditional OPEC. Following that meeting, Saudi Arabia said they are going to increase production of oil by 2 million barrels per day. Russia, on the other hand, said they will increase oil production by 300,000 barrels per day, and the UAE also said they are going to increase production by about 100,000 barrels per day. Now, 2 million barrels per day is a very large amount for Saudi Arabia. They average around that 10-11 million barrels per day, so that's a pretty significant increase percentage-wise. Now, you might ask why Saudi Arabia, Russia, UAE, and some other countries are okay with increasing production of oil while there's a decrease in demand. Business-wise, this doesn't really make much sense, or does it? You know, when you increase production at a lower price, your margins on oil are far less. You end up making less money per oil. You're depleting some of your reserves, and you're working harder to make less money. So it doesn't really make sense in that regard. But these are huge countries, and they are able to withstand these lower prices, and they can battle through them, while some other countries and some other businesses cannot. And that's where this comes into play, because the increase in production during the decrease in demand was all a play on trying to gain market share, which in the long run would be beneficial to these countries. Now, I hope that made sense because it was kind of wordy. To summarize all that up, these countries are able to produce oil at such low prices and such large quantities, while other countries and businesses are not, and they are forced to lose market share, while the big countries that are able to produce at this rate and at that price will gain market share. Now, the top 3 producers of oil are as follows. The United States of America is the #1 producer in oil in the world at roughly 19.5 million barrels per day. That corresponds to a market share of 19%. Following the United States of America is Saudi Arabia, which produces 11.81 million barrels per day, which equates to a market share of 12%. Now, Saudi Arabia is part of OPEC. In total, OPEC accounts for about 44% of the world's oil production. And to end the top 3 is Russia, which produces 11.49 million barrels per day, and that equates to a market share of roughly 12%. 4th is Canada, and 5th is China. They're about 5% market share. Right now, we are going to display 2 charts that I find to be very interesting and very important for this topic. The first being Saudi Arabia's oil production on a yearly basis. When looking at this chart, you can see that the amount that they're producing has skyrocketed in just the last month. And this corresponds to a decrease in demand. So it's a perfect scenario for a huge price drop in oil. Hence the price war and why we went from $60 per barrel to $20. The next chart is the market share since January of 2016 for the United States of America, Russia, and Saudi Arabia. You can see that starting at January 2016, Russia and Saudi Arabia kind of were shared at #1, with the United States being a distant third. But things kind of changed in 2018 with the United States of America really gaining some traction and increasing oil production. And since then, we have taken the clear lead at #1, with Russia and Saudi Arabia falling behind. And then Saudi Arabia had some attacks on their oil fields, which created a steep decrease in oil production for a short period of time. And that is what you see on that quick dip on that chart. So with this chart, you can see that Saudi Arabia has been losing market share over the last couple years. And oil is a huge part of their economy. It's very important for them, and they want to regain some of that market share. And one way for them to regain some of that market share is for smaller countries not being able to produce at such low rates, which would then correspond to bigger countries picking up some of that market share. Another way to increase market share and take it from the United States of America is to decrease oil prices. Now, the United States of America is a huge country, and some of its producers are able to withstand that decrease in oil. But a large part of the oil production in the United States of America is through fracking and shale. And in order for it to make economical sense to produce oil via fracking, the ideal price for oil needs to be around $50. Right now, we're at the low 20s. So these companies are having a hard time. It does not make sense for them economically to produce oil. So if they can't make oil, that will drop the market share for the United States of America. Now, it did not take long for a casualty to happen in the United States of America from this oil price war. And that first casualty came with Whiting Petroleum filing for bankruptcy. Now, Whiting is one of the largest drillers in North Dakota's back-end shale. I've talked about shale being a huge part of the United States oil production, and they are being hit hard by the decrease in oil prices because it's just not economical for them to produce when oil is at such a low price. But Saudi Arabia's plan is not coming to fruition like they hoped, because they are going to have to decrease production in oil. Now, you might say, why? If their plan was to regain market share, why don't they just keep the production of oil up and keep the price of oil down? Well, oil is driven by the markets, and since we have such a high supply and such a low demand for oil, we're running out of room to store oil, and countries are turning away oil. So Saudi Arabia is being forced to cut down production because they just have nowhere to sell their oil if countries can't store it. So fortunately, there will be production cuts. They're estimating around 10 million barrels per day in cuts. That is coming from the most recent OPEC Plus meeting, which is pretty much all said and done, but Mexico has to agree on it. They want to reduce their oil production by 100,000 barrels per day, and OPEC Plus wanted them to reduce it by 300,000 barrels per day. I think a lot of this is going to be driven by the free market, and I'm not sure that 10 million barrels per day will be enough. Some estimates say with the decrease in demand that we would need to cut oil production by 20 million barrels per day, which is 2 times what they are planning to decrease. So I wouldn't be surprised if they have another meeting later down the road. Usually OPEC meets at the beginning or end of the year. So at that meeting, I would expect more cuts in production. So that's pretty much a brief summary of what's happening in the oil markets now. So that concludes this video. We will film part 2 of the video series, which regards how to invest in the oil markets during this time. Stay tuned. That video should be released within the next couple of days. I hope that you guys enjoyed part 1, and I hope that you stick around and watch part 2 of this video series. I did a ton of research before filming this video, more than I usually do, because oil is not something that I'm familiar with, and I learned a ton making this video, which was pretty awesome. Not only did I get to provide you guys with some information, I learned that information myself, so that was great. But other than that, thanks for sticking around to the end. I greatly appreciate it. You know, if you're interested in investing, which is what this channel is all about, click those links down below on that Webull referral and get yourself 2 free stocks, with one of those stocks being worth $1,400 potentially. Also check down in the video description on links on a Facebook group for everyday investors like myself, where we share ideas and we learn from each other. And then ultimately, to wrap up the video, if you like the video or you like the content that I'm providing, please consider hitting that subscribe button, ringing that bell so you're notified when new videos are released, liking the video so YouTube pushes my videos, and adding a comment so that I can learn more about you guys. But other than that, this video is a wrap. It's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya!